In today's video, I'm going to show you a backtest that I've done on the KAMA, the Kaufman Moving Average. It's a long-only strategy, and I'm going to briefly discuss a comparison between the exponential moving average that you see here in yellow and the blue one, which is a Kaufman moving average, both of length 100. And then I'm going to show you the results of the backtests in the daily time frame, 4-hourly and 2-hourly, for the very simple entry and exit signal KMA price crossover. Okay, so when the daily candlestick closes above the blue line, we enter along, and when it closes below. So if you don't know already, my main goal on this channel is to find the best automatable strategies that I can trade in a real portfolio using a trading robot that I've done in Python. So if you want more details about that, I encourage you to look in the description below the video. In the premium member area, you will find the backtests that I do and also the code that I provide to trade the best strategies that I find. The main objective of doing automated trading is not to have the main drawbacks of manual trading, like emotions, the lack of consistency that we can have sometimes us as humans, and also you can take a lot more of trades that you couldn't do as a human, which sometimes, not all the time, but by choosing the right strategies, and this is what I do on the channel, you can have a bunch of these best strategies into a well-rounded portfolio of, if possible, uncorrelated strategies between one and another, and that way you get an account that grows very steadily over time. At least that's the goal, because of course in real life we always have some times with drawdowns. So if you don't remember what is drawdown, a drawdown is mainly a drop in your equity curve, in your account of value. For example, let's assume it has gone from 10k to 15k in dollars value, for example, and then from 15 it goes down to, let's say, 10k again. So this is a 33% drawdown, a 33% drop from the all-time high of your portfolio at this current point in time. And that drawdown measured in percent of 33% in that example, we want to reduce it as much as possible, and that's the main goal of all investments and trading activities, is to reduce that risk, which is very difficult to withstand when you are a manual trader, and that's why we tend, or at least me personally, to trade more mechanically or with very specific rules that I impose to myself. So let's look at today's indicator in blue here, the KAMA, so the Kaufman Moving Average. So Perry Kaufman is a trader who invented this indicator here in blue, and the main goal of this indicator is to avoid or try to take into account the market noise and volatility better than a simple moving average or an exponentially moving average, as you can see here in yellow. So I've displayed for you both of these. So the yellow one is an EMA of length 100, and the light blue one is a Kaufman moving average of length 100, and both on the 4-hourly, as you can see. So what's the main difference? Maybe the reaction time of the blue line is better, because when there is an uptrend, a very violent move to the upwards, for example here in November 2024 for Bitcoin, the blue line was reacting faster than the exponentially weighted moving average, as you can see. Also, when the market tends to trend sideways, for example, as you can see here in October 2024, the Kaufman moving average tends to have a slope that's flatter than the EMA here. So sometimes it lets us detect the ranging markets better than other types of moving averages. So as you can see for this range market, the blue line is flatter than the yellow one. So this is what I try to do on this channel. I test multiple indicators, and each and every one of these indicators tries to capture some nuance on the market movements, on the price action. And that's why I try to exploit each and every one of the existing indicators on the market. Here are the results for the KMA price crossover strategy, long only. We compound our investment 100% each time, and this is for the daily time frame. And as you can see, there's not so many trades, but it's not too bad. I believe there's something like 50 trades or so, and the equity curve is very good because we do about a 16x on the 7-year long backtest here in blue. So here is the heat map where you could choose the best KMA length for the daily time frame. The first column is the total return expressed as a multiplier, not percent, and the second column on the right is the Sharpe ratio, which is a risk-adjusted return performance metric. So when it's above 1, like here in white, but almost for all the length here, or many of them, it's a very good performance. So here what we try to do is we look for the best length to choose from. So the greener, the better. For example, you could choose a length of 100 and also a length of 260 or 70, something like that. You would have about two, maybe a third group here on top with a length of about 30, which is quite rare. I didn't have that result for the SMA or the EMA backtests with the same entry and exit rules. So this is very interesting here. And also with such a low length, we have a lot of trades. And you know, maybe you don't know already, but I try on this channel to have strategies that trade quite a lot, because when there are many trades for our backtests, we can have a stronger conviction in the statistical significance of the results of the performance metrics we get at the end. So these were the results for the daily time frame. Let's look at the 4-hourly. So here, one backtest with, I believe, a length of maybe 100 or so for the 4-hourly. There are many trades, as you can see the number of green dots on the top chart, which represent the entry and the exit of our long trades. So again, this is a long only strategy. And yeah, as you can see, the equity curve in blue, so this represents the account value from 1,000, this is the initial capital, to about 16. So this is again a 60x compared to the daily time frame. Here it's the 4-hourly. And the performance is still quite good. Let's look at the heat map. So here is the heat map for our strategy for the 4-hourly. Maybe the best length would be around 130. So there are not very clearly defined bluer areas here. Maybe around 130, obviously. But yeah, I don't like so much the one at the bottom, which is around 354, something like that. Yes, the performance is about 20x, the Sharpe ratios are very good also, but it might be first an outlier or some kind of overfitting. We try to avoid as much as possible overfitting on this channel, and that's why I test further the strategies in the premium member area. And second, the number of trades with such a big length. So it's indicated here that it's the moving average length. We are talking about the Kaufman moving average in this particular video. And yeah, with such a big length, the number of trades would not be so big. And we want a certain amount of trades, usually above 100 and more. Now, here is the result for the 2-hourly. So the 2-hourly, there are many of trades, and that's why I test this time frame. But as you can see, the performance is far less good. Why? Because we go to an 8x, as you can see in the middle chart in the equity curve in blue here, and then we have to endure a long and big drawdown of about maybe from 8,000 to about, let's say, 2,000, which is a minus $6,000 on the account, which is very, very hard to withstand, and very few people would choose to continue trading this strategy in 2 hours here with such a drawdown. But let's look at other length. So here is the performance matrix heat map for the 2-hourly KMA price crossover long only strategy. And as you can see, the best length are around 120 or 10, something like that. this area, which is the rosiest one. But the main problem here with the 2 hour is that the Sharpe ratios are not very good. They are all below 1. So these are not very good performance metrics. So yes, I think we should stick to the 4 hourly for this very strategy. With the 4 hourly, we are sure we trade a lot. So we have some statistical significance. This means that the result we see in blue here means something. Captures something in the historical data at least. One drawback is that there is not clearly defined bluer area. So yeah, you could choose a length of let's say 130 and maybe 200 or 300, something like that. So I hope you had some good value in this video today. We explored the Kaufman moving average with a very simple entry and exit rule, which is a simple KMA price crossover. So when the price is above, we enter long. When the close price is below, we exit the long. But maybe I would like to explore another entry and exit rule, which is based this time on the slope of the Kaufman moving average. Because yes, when the Kaufman moving average is about flat, as you can see here, we could choose not to trade in that range. And when the blue line starts trending, so when the slope is above a certain threshold, for example in here, we could start entering the long at that time only. That way we could try to avoid the sideways market, which was very long for Bitcoin here in 2024, for example, and try to enter the trades when the trend really starts. Of course, it's easier said than done. That's why I'm going to explore this strategy, I think tomorrow or so. So if you like the video, please hit the like button and also subscribe to the channel to hear from me in the next backtests that I do. And I see you tomorrow, and bye bye.